Big Ben begins his two-day testimony on the Hill today at 10. European stocks and U.S. futures rise as investors speculate that Bernanke will hint at further stimulus. Gold is up ahead of the news and the U.S. dollar is down against the euro. Earnings continue with Goldman Sachs, Yahoo, and J&J reporting today. I'm Brittany Umar and the morning call starts right now.
Good morning, I'm Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. So it was a fairly volatile trading session yesterday. The markets did end negative on the day, but ultimately didn't seem so damaging.
Yeah, after a 200-point move in the Dow on Friday to be down 50 yesterday, that shows some commitment. We held the top third of the range. So I think if you're on the bullish camp, yesterday was viewed more constructive than damaging.
Right, and of course today we have Ben Bernanke on the Hill at 10 a.m. What could he say to lift the markets today?
I think at this point, the market's expecting for him to say a lot. I see a lot of talk out there, a lot of people saying it's not a matter of if, it's a matter of when. When will they actually act? Are they going to do it on August 1st or wait till September? So I think the market is a little vulnerable for some kind of disappointment considering we're 30 handles off Thursday's low. And the news flow as of late has been very, very disappointing, showing slowdown around the world with China, the IMF. So I think the hopes are that Big Ben could save the day. So at this point, we have to listen very closely because it starts at 10 o'clock.
So what are the key levels to watch then today?
Yesterday, if you take a look at the chart here of the SPX, you will see that we held higher. This was the day we reversed on Thursday into the intermediate trend line. Then you had this wide range bar on JP Morgan's earnings. You had a rally fueled by the banks, which was somewhat good. Then yesterday we talked about, what level can we hold? And we held the 8-day. We held the top third of this wide range bar showing commitment. And now you have like this small little trend line here. So I'm going to watch this as a pivot. If it can get above 1357 and stay above it, I think that we can see some higher prices, but I just want to make sure it's not like an open up push through failure where it squeezes some shorts and then fails below. So I would say, watch this 1357. If you're playing long, stay long only if we stay above it. If we start to fail and see a day develop like we saw back here when we cross this little trend line, don't get caught. So just don't fall asleep behind the wheel, but don't overall just be a blanket short thinking that we can't rally anymore because of the headlines we've been seeing, because the market's been absorbing them pretty well.
Yes, and in terms of sectors, retail has been a real mixed bag as of late. There have been significant leaders and ones that are weak. Walmart has been your stock pick of the year. Has been an example of one of the leaders in this sector. Right now it is far away from the key moving averages. Will we see it pull back to them?
At this point, I think you have to take some off the table. The strategy coming in was a decade-long channel, buy it above 60, target 72 to 75. If you look here, you will see stock went from breaking above this range on the chart all the way up to almost 73. So you want to sell some. Recently, even a more tactical strategy, we talked about target, just so it shows you how you can connect the dots. Nice descending channel here. Started talking about it on Bloomberg. Pow, I know it was downgraded today, but I think you could probably buy this if it could pull back to 59 or maybe even closer to 60. I don't even think it gets down to 59. So it shows you that there are spots you can make money as an investor, as a tactical trader, but you just can't have an overall opinion on a blanket retail group or somewhat.
Right, and Intel reports after the bell today, semis have been weak. Could this possibly be a catalyst for the SMH?
SMH has been very weak, and we've seen a lot of pre-announcements. You saw it in AMAT, you saw it in AMD, and Intel, which was a stronger stock in the beginning of the year, started to get weaker. So a lot of people looking at this earnings report is coming out after the close. If you look at the chart here, this was your breakout failure. It's hovering on big support, so it's below all the moving averages. So right now, the street is not anticipating a good report. So if it gets that bad report, maybe it opens down and that'll be buyable. We'll talk about it tomorrow. But if it does do anything to the surprising side, you'll probably see a rally here because, again, the street's taking down their expectations there.
And Facebook still struggling. It's in its longest slump now since its IPO. What are the key levels you're watching with Facebook?
Facebook's a great example on how you could be wrong and win. Because I went on Mad Money, we had a strategy saying it was looking better as long as it stays above a certain key technical level. And yesterday, I got stopped out at 30 and a quarter. no big deal. You're allowed to take losses. You look at the chart here of Facebook, this is a lesson to be learned. You take a closer look here and you will see we had 2 buys. One buy was right here, another buy was right there. It looked as if it was trying to build its sideways channel, so we were long in here. And I said if we break support, if we break below 30.55, get out of the way. And look what happened. You went as low as 28.25. So you can have a stop in a situation and lose a lot less, but if you got stubborn and you bought, you're coming in today a little bit more stressed out than if you took your loss and waited to revisit.
All right, we're going to be diving into all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.